The biggest economic news of today is the collapse of Silicon Valley Bank and the collapse of Signature Bank and the upcoming financial Armageddon.
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
Silicon Valley Bank's collapse set off a panic not seen since the days of the financial meltdown of 2008.
Hi, my name is Vitaly and this is my channel, Bare Basics Economics, the channel where I teach economics and sometimes give you my comments on economic news. And today, the biggest economic news is the collapse of Silicon Valley Bank. So in this video, you will learn what are the reasons of this banking failure and what it means for the future. What was stunning was how fast this bank collapsed. Within 30 hours, this bank, the bank with 200 billions in assets, collapsed. And the next day, Signature Bank, the bank with 100 billions in assets, collapsed. 3 days, 300 billions wiped out. And just as fast it failed, the US government rushed to the rescue.
Customers who deposited money will be made whole.
But who are those clients? They are not your everyday Jack and Jill. They are super rich venture capitalists of Silicon Valley. So the US government rushed to protect the rich, because protecting the rich is the core American value. So why did the Silicon Valley Bank fail? The media tells you that the main reason was that this bank didn't have enough diversification. That this bank invested too much in just one tool, long-term treasuries, long-term US bonds. But think about this. Silicon Valley Bank put its money into the safest security in the world, bonds of the US government, and yet it's failed. So not enough diversification is not a real reason. So why did the Silicon Valley Bank collapse? I see three main reasons. First, high interest rates. Second, deceitful accounting. And third, dumb bad luck. First reason, high interest rates. For 1 year, the US Federal Reserve was raising its policy rate. They raised the rate from almost 0% to 4.5%, the most aggressive and unprecedented rate hike in history. And they did it to control inflation. And they failed, but the result is this. Interest rates are now high, which means that money is expensive, borrowing is expensive, and SVB is the first bank to fail under the pressure of high interest rates. Second reason, a deceitful but legal accounting. Before the financial meltdown of 2008, the most common accounting procedure was mark-to-market. For example, let's say bank bought a stock or a bond. This bank would record this transaction at the current market price. But after the recession of 2008, American regulators changed the counting. They changed the counting to make everything nicer and to hide losses. So right now, when a bank buys a security, let's say a bond, it can put a bond into one of the three categories: available for sale, or held to maturity, or held for trading. So when a bank buys bonds and puts them in one of these categories, it shows those bonds at the fair value. Fair value sounds fair, right? No, the fair value is not the market price. It's not the actual price. So imagine the bank bought toxic bonds and bond prices are falling. So the bank is suffering losses, right? Now, this bank can hide losses. This bank will show toxic bonds at a fair value, which means that financial statements don't mean anything. Now, banks can legally ignore market prices. They can legally hide losses. which makes you wonder how many banks like SVB are there, how many banks are potential bankrupts.
The American banking system is really safe and well capitalized. It's resilient.
Finally, bad luck. SVB failed, but every bank can fail because every bank collects deposits, and out of those deposits it keeps only a tiny teeny fraction called reserves and lends the rest, which means that banks don't have money. Every bank is a potential bankrupt. If SVB failed, other banks can fail too. Wait for more bankruptcies.
Americans can have confidence that the banking system is safe.
First, expect more bankruptcies. Expect more bankruptcies because high interest rates put pressure on banks, and many banks, especially small and medium-sized banks, will fall under this pressure. And that brings us to the second prediction. Big banks will get even bigger. As small regional banks collapse under the pressure of high interest rates, people will be rushing to big banks, especially banks which are too big to fail. So, banks too big to fail will get even bigger. Big banks will swallow small banks. Which makes you wonder if the failure of Silicon Valley Bank was a truly random event or it was carefully planned and executed by big banks. The collapse of the Silicon Valley Bank means that the fight against inflation is over. Now, the US Federal Reserve has an excuse. They can now say that, hey, we need to protect the economy, we need to protect big banks, and everybody loves big banks. American politicians do. So, to protect big banks, the US Federal Reserve will go back to good old inflation. They will go back, they will resume printing money, printing money, printing money. In theory, the US Federal Reserve is independent, but in reality it's not. The president appoints the chairman of the US Federal Reserve, and the Fed's executives report to the US Congress. So the US Federal Reserve is just another political institution that serves politicians. Today it's President Joe Biden and the Democratic Party. So we should expect that the US Federal Reserve will soon stop raising its policy rate. It will resume quantitative easing, printing money, and inflation, already high, will get even higher. That was my video on the Silicon Valley Bank. If you want to stay tuned, if you want more updates on the financial Armageddon, subscribe and I'll talk to you next time.